But I want to say one other thing, and I'll take this wherever you want to go. I want to say one other
Yeah.
thing that, so a lot of what I've been talking about for a long time is BRICS, and you know that. And I talked about this new bridge technology that has been adopted. It's a Chinese technology, and it's now called BRICS Bridge. And that, in essence, is central bank to central bank. And I mentioned that I believe that they are expanding it to the Belt Road because Russian finance minister came out and said, well, we're going to open this up to non-BRICS countries. And the minute he said that, it lit a fuse under the dollar. And I expect now he came out and said we've already extended it and have connected 11 Asian countries, those in Southeast Asia, and 5 in the Middle East. That's 38% of global GDP. They are now operationally connected. Then he said we're going to, open this up to other non-BRICS countries, not the West. It's not compatible with the dollar, the euro, or the pound. This new cross-border technology that settles in 7 seconds outside of SWIFT. But these other countries are hooked up. And I said immediately publicly in my speech at Rick Rule, I said they're going to open up to the Belt Road, which is 75% of human population and 55% of global GDP right now. You put that with the Asian countries and the Middle East that are already part of it, along with the Shanghai Cooperation Organization, which in and of itself is 50% of human population and 35% of global GDP, and the Eurasian Economic Union and the BRICS, you're 90+% of human population, 3 or 4 of the largest nuclear arsenals in the world, the majority of all the commodity production, the majority of the manufacturing. Vietnam just joined along with China. I mean, on and on and on and on, and it is nothing to shake a stick at. It is nothing to underestimate. It would be silly to do so. All right, so they're setting up the infrastructure. Well, how? The infrastructure, the backbone of it is the Shanghai Metals Exchange. You mentioned them. They just expanded their outreach. They just finished a new vault in Hong Kong. So anyone and they just made it now deliverable gold in yuan, where you do not need to convert first to dollars.
I
So the
just
next
talked
vault
about
is
that. Yeah.
the next vault's being built right now in Saudi Arabia. And then from there, they go all throughout the Belt Road. So they're expanding the skeletal system of it all are these vaults, multi-jurisdictional vaults all around Asia, Africa, South America that will spring up. There are 2 right now that are connected, and that's Saudi Arabia and Hong Kong. So right now, the Saudis can buy oil from China in yuan and immediately convert it into gold in yuan, not going back to dollars first, and take possession in Hong Kong and soon to be Saudi Arabia. This will expand. All right. So I was saying that's a huge ass deal. Well, then I see an interview the other day, and I'm saying this. By the way, UBS just raised their silver target to 42 bucks. I'm sure you saw that.
Yeah, and
But
Citigroup's 43
yep.
too.
But I wanted to just to cap this so you understand this is covering 2 separate things, right? And on one end, it's covering how fast the dollar is going to get killed, and on the other end, it's covering 3 things. What I think our plan is, and the third thing is why you need to think of doing this very quickly, not just because of what's happening to metal, but what's happening to our privacy. So, anyways, I watched this
Mm.
interview. I watched this interview with a guy named Andre Mikhailishyn, Mikhailishyn, Mikhailishyn,
What a name.
whatever. All right. So Andre is the developer and CEO of BRICS Pay. Now, I've talked about BRICS Pay, and BRICS Pay is a B2B application, business to business. It is a consumer to business, business to consumer, small bank to small bank. It's retail, and it's again doesn't it sidesteps SWIFT, and it's instant pay. It's like a Visa card that he even said we'd love to work with Visa, but we're sanctioned, so we can't work with the West. But he said it's open to non-BRICS members as well, and we are currently in meetings in China to develop BRIC Pay technology throughout the Belt Road. Oh, really? So that's 75% of human population that will have the ability to transact B2B, consumer to business, et cetera, small bank to consumer, on BRICS Pay outside the SWIFT system immediately. So you have the central bank to central bank, that's the BRICS Bridge. You now have BRICS Pay. And he said it's open to all these other countries. And he said in the very near future, BRICS Bridge and BRICS Pay will be combined. So all of these things are coming in, and this is going to kill the dollar over time,
Oh
right? Because
yes. Oh yes.
you're you're killing the settlement status by not using dollars. They trade their
Right.
local currencies, and then the reserve status is no longer treasuries; it's
Right.
gold. Well, so and then I'm going to tell you one thing that he said. Then I'm going to tell you what I think is happening, and then I will answer for the rest of the time. I will answer
No, you're
questions you
good.
have.
No, this is
All right. So he says he's asked a question, and the lady says, "So Andre, the world is filled with terrorist organizations. How do you know that your technology won't help fund terrorist organizations?" And he says something that I'd never heard before. Now, I leave my company in Minneapolis, Jay, because my main company, even though we've had a satellite office here in Florida for going on 18 years, I left my corporate office there because the only state in America where you have to be licensed and bonded and background checked. It holds Miles Franklin to a much higher standard. Most companies won't do business in Minnesota because you would have to be licensed, bonded, and background checked every year, myself included. And it's the same thing as it's related to like FINRA and selling securities. So Miles Franklin, even though we've never had a customer complaint in 35 years, the fact that we're licensed, bonded, and background checked annually separates us. And if you tell people, most companies send it to Minnesota, they'll say, no, we can't.
right.
So anyways, I know that what I'm about to tell you better than most because I take the classes. So he said, well, regarding the terrorism question, he said, well, we are opening this up to all sorts of other countries, not just the BRICS. And so we are very sensitive to KYC and AML issues. KYC is know your client, and AML is anti-money laundering. So these are the
Okay.
regulations, like when you open up an account with Coinbase, or you open up a bank, or any of these things. They want to know who you are,
Oh yeah.
where the money
Yeah.
came from, and anti-money laundering makes sure that you haven't been selling, weed on the corner for the past 30 years. So you have your W-2 says that over the past 18 years you've made $9,000, yet you open up a bank account with $300,000 in $20 bills. They may have a problem with you. That's anti-money laundering. Where'd you get the money? How'd you get it? Your W-2
Right.
doesn't support it. That's know your client anti-money laundering. Those are the kind of things that they're trying to protect against, right? But then he said something else. He said, and KYT as well. He said, our software is compliant with KYC, AML, and KYT. Now, I'd never heard of KYT. But for those of you that have gone to the bank and tried to, you're going on a trip with your friends to Vegas, you take out $2,000, and the teller says, "Excuse me, what do you plan on doing with all that money?" And you always want to say, "None of your damn business."
Right.
But they've been asking that for a long time. My feeling is that they have been pushing KYT to the tellers and say, by the way, it stands for Know Your Transactions. And I've never heard that before.
Mm.
So they've probably been saying, ask them if they volunteer it, write it down. If they don't, if they push back, let it go. If they say something that makes you suspicious, fill out a suspicious activity report form. We will never report. It's illegal to report who filled it out. So if a teller said, yeah, he was really freaky and I didn't trust what he was saying and I think he's up to bad news, she'll fill that out. It gets filed up to some bureaucrat who looks at it, and if they believe you need to be investigated, you will. Well, anyways, what I'm saying is with this new stablecoin passage, if you don't believe that they know who you are, where you got the money, and what you are spending it on, I got a bridge to sell you. So when you talk about this new stablecoin deal, and I'm going to tell you why they're doing it, and then I'm going to shut up because this puts my whole thesis together. All right, so anyways, the noose, everyone thinks, oh, it's great, there's no CBDCs, but the noose of privacy is closing. And it's closing because they will control the on-ramp, off-ramp. The whole premise of this new stablecoin bill is the legislation of it and the regulation of it. They will know the on-ramp and the off-ramp. They will be watching, and they will know, what you came in with and who you are and what you bought and what you're coming out with, all of that stuff. All right, that's all going to be digitally programmed. But the reason that we are seeing the stablecoin bill is not what people think, in my opinion. It is not because of being enamored with what stablecoins offer. And again, they call it a stablecoin backed by almost exclusively by treasury debt. How stable is a coin backed by debt that buys more
Right.
debt, and which in turn buys more stablecoins, which buys more debt? It's not really at all. But here's the reason they're doing it: we're broke, and it's gotten to a point where we can't even really, like, they just are right now. The next Treasury auction, they're printing like they're trying to sell 140 billion worth of bonds to buy back 85 billion in bonds that are, or 125 billion in bonds to buy back 85 billion in maturing bonds, and then another 30 or 40 billion to run the operation. So they're selling debt to pay off, they're going deeper into debt, get money to pay off the debt that's coming due, and then to run the ship, which is all indebtedness and everything there. I mean, so they just raised the debt ceiling 5 trillion and $3 trillion deficit. But here's the thing, we owe $28 trillion by 2028. That's Treasury's coming due. And with a $3 trillion deficit minimum each year in 3 years, 2028, that's another 9 trillion. That's 37 trillion. We take in 5 trillion a year in tax revenue. It's 15 trillion. So we're about 25% of the way there, or a little bit, 15 to 37. So almost a third of the way there, just over a third of the way there. Where does the rest of the money come from? They're going to have to print. There's no way that they will be able to. We can't grow our way out yet. I think ultimately that's what they want to do. Can't default. Well, what are we going to do? We have to continue to print money. I believe with all of this stuff happening that they're going to destroy the dollar. They're going to destroy the dollar purposely in an effort to save the system. Let me explain. So these stable coins, every stable coin that's issued, you look at Tether, they're already a massive holder, one of the biggest of treasuries, all short term. And so, so these stable coins are backed by treasuries primarily. And when you realize that you have countries like China and Japan and Saudi Arabia dumping treasuries and buying gold, where is the support for the ever-increasing debt? So they continue to print money. They destroy the value of the dollar. But I'm going to tell you how they ultimately destroy the value of the dollar in a moment. But so they continue to print because they have to pay, just to be able to pay the debt that's coming due. And they continue to issue short-term treasury debt through the issuance of stablecoins. And you'll see all these corporations like American Express and banks, they'll all issue stablecoins for ease of transaction and this and that and boom, boom, boom. But behind all of the stablecoins are treasuries. That's pretty much, I believe, the deal. You load it up with treasuries. That will give demand to the treasury market, will label it, and they'll all be short-term. All be short-term, under 2-year in duration, so they can keep financing the working operations of the treasury market through the issuance of stablecoins. Now, the back end of the treasury market, as Luke Gromen says, they want to anesthetize the 10-year, and here's how they do it. Remember, I had Judy Shelton on my show, and Judy was Trump's nominee to run the Fed in 2016. She may run it here when Powell's gone in a few months. And she said, Andy, Trump has told me that he will issue gold-backed certificates, treasuries, rather, redeemable, on July 4th next year, 2026. He's told me that. We discussed it when I was part of the transition team, she says. And she's been saying that a lot on Twitter lately. And then shorter duration after that. So he's going to peg it to gold. Now, the first step would be to reshore all the gold. And we're seeing so much gold coming back, it doesn't make sense. More gold has been hitting the COMEX than at every time in history. And I believe there's probably a lot more coming in that the Exchange Stabilization Fund, which is controlled by the Treasury Secretary, can bring back under the guise of national security without telling anyone. They can bring it back through proxy banks, Citi and Goldman and JP. It doesn't have to come back the way we think. I think they're bringing back a lot more. But here's where it gets interesting. Luke Gromen was asked, do you think they'll revalue gold? I asked Judy Shelton. She said yes. He said yes. He says he thinks they'll let it get to 5,000, 6,000, 7,000 between now and the next year and then revalue it to some crazy number. Now, James Rickard says 24,000. Now, for those of you who think this is crazy, gold is held on the U.S. balance sheet in what's called the gold revaluation account. Name of it. Can't make it up. It's true. Nixon did it in 72 and 73, but Roosevelt did it in 33. When he confiscated gold at $20, he devalued the dollar by 40%. Soon after, made gold 35 bucks an ounce. Now, Nixon did it in 71 after he closed the gold window. The following year, it was closed at 35. The following year, 72, he devalued the dollar by 7%, made gold 38. The next year he did it to 42.22, devaluing the dollar again. This is where it has stayed on the books until now, or it's still at 42.22 an ounce in the gold revaluation account. Now, if they made it market to market, it's worth about 800 billion to $1 trillion to the Treasury. The Treasury issues certificates, gives it to the Federal Reserve. The Federal Reserve prints money and gives the money to the Fed. It's highly inflationary, and it devalues the dollar against gold considerably.